Hey everyone. You guys can hear me, right?
Yep.
I think so. Well, thanks for tuning in. We have Varus Capital. They're a market maker that is part of our Now Stream program that we'll shortly announce. And a couple friends of mine that I had interacted with in New York in the past. Um, but feel free to make sure to ask questions in the chat here, and you can chime in wherever you want. Essentially, we're going to introduce Varus Capital a bit, talk a bit more about venture and investing in crypto in general, given all of us come from a more TradFi sort of background. We'll talk about just how that sort of skill set is helpful in crypto. And I think we'll also talk more generally about like go to market making, metrics that you sort of use when evaluating investments. But why don't we kick it off for a bit by introducing, I guess, Varus Capital, and then Will and Bijan would love to hear more about yourselves.
Yep. I'll give a quick Varus intro. I'll hand it off to Bijan to introduce himself, and I'll do the same. So, thanks for having us. Yeah, Varus Capital, multi-strat fund focusing on crypto. We have a quant fund. They do trading on centralized exchanges. We'll be moving on to decentralized exchanges this year. We've just started doing some work on that. I joined in January to run our first venture fund. So it's an early stage focus fund, mostly pre-seed seed. We can reach up and do some A rounds. We can also do follow-ons for any of our existing portfolio companies. Founded in 2017, headquartered in Bangkok. Our managing partner also has a background in law and finance. He previously co-founded a real estate private equity fund. Some LPs got interested in crypto in the 2017 ICO boom. One thing led to another. Darius left, started Varus Capital. We've been doing super well. We're growing really rapidly now. We've got people all over the world: Switzerland, Dubai, Australia, Hong Kong, Thailand, New York. I'll hand it off to Bijan to introduce himself.
Wait, so Darius was at what firm prior?
I think it's called Creative Equity Partners or something. It's a real estate private equity fund. It still exists. It's like a solid nine-figure business.
True.
Uh, cool. Yeah, so I can go ahead and give a bit of background about how I got into crypto. Around like 2011, I found out about Bitcoin. I was sort of like messing around this space. Came from like an immigrant family, so like I didn't really have like an allowance or like money to like mess around with. So at the time, I figured the best thing that I could do is like mess around and start like mining Bitcoin and some of the Bitcoin alts that existed at the time. So like I think some were like Lucky Coin and Feathercoin. Sort of forgot about crypto. Another 5 years like went by. Was in college, tried to trade it a little bit. But then again, like I forgot about it and ultimately like went down the whole traditional finance path. Went trying to like get into Wall Street. So I went into investment banking. So around like 2020, I was peak quarantine. Was starting my job in banking, working like insane hours. And then like I remember ETH 2.0 was around the corner, which was like a pretty huge thing. And so I re-entered the space. Had some like disposable income for the first time, and so I just started throwing all my money in. Nothing I would advise, but I actually took like a loan against like all the Bitcoin that I had, and just like threw it all into ETH at the time. Um, and then I just started using like a ton of protocols and got hooked because like that was the first time in the space, or around like the early part of 2020. And yeah, around the early part of 2020, that was like the first time that you got start actually using protocols as opposed to just trading um, on like a centralized exchange, which is how things were in the past.
Yeah, so I have a similar background to Bijan. We met in banking. I also got into crypto, and I formally got into crypto in 2020. I'll just share a quick DGen story, my best and worst trades in a minute or less. But what really interested me was like real world use cases. Um, I realized that payments could be like super, people. There were a lot of payment startups that could come out of crypto. For example, Amex, Visa, Mastercard. These people were charging 3, 4, or more% spread just by being at the point of sales and processing payments. And when I learned about Nano, which is previously called Ryblox, people were running validators and taking a 0% cut just because they wanted to be a functional currency. People could pay in Nano and then swap back and forth from fiat, and then businesses could save money that way. So I saw the potential first there, then obviously got into DeFi on multiple chains. Went all in on Bitcoin late 2020. That did pretty well. And then I went all in on Nano, and that pumped an insane amount. I got it's like a 2x and then like a 15x in a row at one point, on like a pretty good stack. Then I diversified into some Ohm forks, and shit coins, and pretty much lost all of that. So, and a pretty epic rise and fall, to be honest. But yeah, that was all with capital I was willing to lose. So, don't take advice from that.
Yeah, no, I remember the days Will was shilling Nano. I was like, I don't know if it's this Nano thing, but Will seems to love it. So, all right. Have you guys
Not anymore, I
ever?
would add. Not anymore for a long-term investment. So
Yeah,
just
what
let me
was
put
the?
that out there.
Were they just the payments processor things, kind of like Lightning Network?
So yeah, their whole thing was we have a limited amount. We gave it away for free. We are very focused on payments. We're a DAG, near instant finality, eco-friendly. And in late 2020, I mean, like these were all clicking to me. I was like, all right, Bitcoin's coming back in a huge way. Tesla just started accepting Bitcoin, and I was like, if the market is efficient, they're gonna think about Nano at some point. And the day Nano went to like 17 something on Kraken, and keep in mind I got in around $1. And I held for like 5 months through like some insane pumps. It went up to like 99 bucks on Huobi and 17 something on Kraken because Tesla announced they were no longer going to use Bitcoin. And so in like 10 minutes later, it pumped super hard because I think the speculation was maybe they found something more climate friendly.
Like Nano. Okay, that's funny. Because nowadays I think we do run into a bunch of chains that pitch DAG, near instant finality, and eco-friendly. But I mean, at the time it was probably really exciting. Let's dive a bit into. I mean, the topic of this is kind of like traditional finance versus crypto. Um, Given you guys came from more TradFi backgrounds, how do you think that sort of impacts your ability to operate within the space?
Yeah, so I think the one thing that I would say, and especially like when you're trying to go at least into TradFi, everyone talks about like one of the most important things to be successful in that space is like attention to detail. But that just carries like in a lot of other aspects of life, and I think including crypto. So a lot of times, like in these like large institutions or banks, like you're working with these massive like you're working with executive teams working on like a multi-billion-dollar acquisition or some other deal. So it sort of sounds stupid, but like it can really change someone's perception, um, or impression of you based on like how polished or formatted something is. Literally, you could have like the two pieces of like of the same content, one with like good formatting or errors, and the other that's like just not up to par, and that just changes the way people like perceive you and like how intelligent you're perceived. And I think that's like really relevant to crypto because, as I'm sure like everyone has like probably noticed, the space is very like narrative driven, um, and that essentially like plays off of like how a lot of information is presented to you, and so like that helps in being able to sort of cut through like the BS or fat on things and understand like what's being marketed to you and like what's being sold to you versus like what are things that actually have value in the space, or like the things that you should invest in.
I have a funny, well, it wasn't funny at the time. On the attention to detail point, and I'll give a couple other examples. One of the first sort of deals or potential deals I got staffed on, we were trying to get hired by, it was a public company, majority owned by a private equity fund, and we really wanted to get hired to help them sell all their renewables assets. It was like around $1 billion deal. And I remember after we got off the pit, or like we got off the pitch, or we just sent the deck out, and we got called into a room, and there was like one chart, on one quartile of one page where it's supposed to be megawatts for like these energy assets. I think we put a dollar sign instead, so it's like the wrong like unit of measurement. And our founder and managing partner was like, we're not JP Morgan, like we don't get to make mistakes. Dude, this is like the corner of a corner of a page. And so yeah, attention to detail, I mean, like it adds up, and some people are more, manic about it than others. But other than that, even in, TradFi, if you're working on a huge deal with a mega fund, or if you're working on an early stage venture, I think the questions you ask, there's like a lot of overlap, like motivation to sell, or motivation to, why are founders selling like this company to a private equity firm, or how do you think about exit, or how are you going to make this more profitable, things like that. So there's honestly a super long list of overlap.
Yeah. One last thing I might add is just being able to um, like work with valuations. So um, yeah, like when coming to investment, like or when deciding and thinking about like investing in something, it's like important to rationalize like why it is that value, or like why it could be some value in the future. And like the further or the more mature companies get, at least in like TradFi, like it could become a huge issue, a problem. Like uh, I think there was like one at one point at our bank in which uh, some like someone used like different comps, or like didn't use like maybe the most accurate comps, or like a low amount of comps for a particular company, and like it basically didn't rationalize the value of the company that well, and like it created an entire like lawsuit situation. um, and so yeah, that's like something that's like really important too. At least, or like really good experience from TradFi is just being able to like look at a particular like crypto asset and sort of like think about its value like relative to everything else that exists in the space.
Yeah, I remember just falling asleep during calls and banking, and then people like getting mad at me for not remembering that one number that was said 45 minutes ago. So I think it definitely changed my way on how to pay attention and take notes and stuff. Um, I'm surprised that your MD said we're not JP Morgan. I'm like, I take slight offense to that.
No, it was a compliment. He was like, JP Morgan, you can make mistakes and still get hired. Yeah. He's like, if we make mistakes, we might not get hired. That was the whole, he was like, yeah, we don't get
I see.
second chances. Yeah, yeah, yeah. No, it was the opposite of bad.
Fair enough. I guess when you're considering what skill sets do well in TradFi, I mean, some of that is the detail orientedness, but then sometimes you need that aspect of creative thinking, and being able to not just follow the herd in venture. Um, how does that translate, I guess, to good crypto investors, or good skill sets for crypto investors, if that made sense?
Yeah, I'll start. I think we could take this any number of ways on the venture piece and on the personal piece. I'm happy to say a couple things, but you're right. I mean, like, I don't know what the latest study says from Harvard Business School, but a lot of venture funds don't actually make money. So there have been instances where there's actually a deal I think we're going to be closing tomorrow or early next week. No fund was interested. I mean, like we sent it to almost everyone we like, and we were the only fund that came in. Like a Dow came in, and then a good chunk of angels from like family and friends of this guy. And then he closed a huge check this week, and he's starting to get some real traction. So I don't. It doesn't really bother me when other people don't see what we see. We take a super holistic approach. I mean, we take a fundamental view. Obviously, we have to take a view on like the vertical, and the founder as well. But yeah, I think you just have to do really solid due diligence. But that doesn't always work when you're just aping coins on chain. I mean, I got burned by both Serum and Radium, both Sam coins, because I was trying to right curve it. I mean, like there was a point where I was like, wow, I'm missing like these 50x, 100x pumps. After Nano, I was trying to make it all back after I diversified. And I was like doing some analysis, but I completely missed some of the tokenomics piece, and who owns how much and how much is liquid. So um, it is very different from venture and personal investing. But and I'll pause after this and hand it to Bijan. The really interesting thing about crypto VC is that you don't just get equity. A lot of deals that we do have a token component, not all of them. Nirvana Labs is, one of my favorite deals. It's equity only. Um, but crypto venture, you also have to like think about trading. And so we have this quant team who can help us offload tokens in a way that doesn't destabilize price, trading within other market maker algos or doing it themselves. Or we can do it on chain. But there's a liquid component as well. So it does make it a little bit of a different ball game than normal venture.
Yeah, I think one one thing I say is probably like ironically, I think having some form of like ADHD like actually might be an advantage in crypto, as opposed to like what you'd see in TradFi. So I think like having the skill set where you're able to jump from project to project, or like basically there's just so much information that's consistently like being pushed through this space. I think it's like really important to be able to synthesize that, and jump between things very fast and identify where gaps exist in the market. Um, and I think somewhat similar to that is like amongst like market participants that I've seen in the space, or like I guess on crypto Twitter, sort of like in more like degen and like the more degen ecosystem, is you have a lot of people that are like have generally been like chronically online in their lives, or either like historically have like been like very intense gamers or even like gamblers. And I think with that comes like the just like wanting to sort of like sit around all day, or like actually like enjoying sitting around all day being on the internet and sifting through like large swaths of information and identifying like really interesting things. Um, and then yeah, and then also just being able to take like sort of like calculated degenerate risks. This is like maybe less so for venture and like more like on my own sort of like personal experiences. Um, I sort of joke about this. Like one time my brother told me like 2 years ago, and I still repeat it to myself sometimes, is like is scared money make no money. That's like something he told me that I always think about, where like sometimes you just don't have all the complete information when you're looking at some like micro cap coin. Um, and so sometimes you like just decide to like go off of what you have and just like put money in, and then like decide and do your research after, because when you're operating at like really low valuations, things could just like move really fast.
Yeah, that's the funny point that you bring up with the ADHD being an advantage. I think one thing in crypto, you have to spend a lot of time just like learning random things, and it's not like spoon fed to you, maybe in traditional finance or traditional jobs, where there's like, oh, you read this book, you go through this training program. There's nothing really proven yet in crypto, so there's a large disparity between knowledge gaps. So I think I find myself always feeling dumb, but then in some conversations, but feeling smart in a lot. So just an interesting space from that perspective. I think, Will, you were talking about you liked the fact that Nirvana was an equity deal. I guess, how do you guys think about equity versus SAF deals? I think I've heard it both ways, where equity eventually you'll need an exit unless they have a token warrant. So then maybe you're looking for more of a future IPO. A SAFT is a bit more clear cut, but then it's harder to mark up the new valuations, but it'll be more liquid in the future because you get the token right off the bat.
Yeah, this is a great question I've asked at a panel at a conference before. I won't say who was on that panel, but sometimes I'm really surprised by how other crypto VCs answer this question. Um, and how I framed it then was like, what advice are you giving founders on equity versus token value accrual? And some VCs will, with no other caveat, will just say, "Oh, the equity is worthless," which is never true. I'm pretty sure. Or yeah, I mean, you'd have to give a very niche example where the equity has no value. Um, but in general, we almost always get equity, even if there's a token. You just don't get the same level of legal protection with a token only deal. It's still unregulated in many markets. There's only a few places where people typically issue a token out of, and you're not going to get the same protection. I mean, we always like to do a safe. Obviously, for early stage companies, or share purchase agreement if it's a later round, or if there's an exception. And On the token piece, if they don't need a token, sometimes they'll still have, a token letter, a token side letter, or a token warrant, just in case. So we have seen a couple instances of companies where we kind of agree, like, yeah, we probably don't need a token, but maybe, but maybe we'll launch one later. I mean, I think Blur and OpenSea, it's not the best example, but you'll kind of get what I mean. Like it's just a marketplace, right? And I guess once they launch like DeFi products on top of it, like you could start to see like a path to like where a token makes sense. Um, but maybe they do a couple things better than OpenSea, but because they have a token, people aped it. I mean, they want a token airdrop. They want free money. And so tokens can be super valuable as a user acquisition tool, but from like a long hold venture perspective, it really needs to have like hard value accrual for the token piece to be super interesting for us.
Yeah.
Yeah, I think other cases where like token and equity can get interesting is it just depends on like the type of company that you're looking at. So one thing that we've seen is like we've been doing some investing in like different games, and so that kind of like changes how we think about value accrual, where like you have the token of like a game that like represents the sort of like in-game the economy that exists around that specific game, but then the equity to the studio itself might have its own value, like with the IP or like the future potential of like building out additional games. So that's something that's like pretty interesting. And then sometimes like I agree with everything Will said. I think the only caveat I'd say is like I think there's like a maybe a couple cases where it might make sense for a token only project. Like I'm thinking about a case where you're like very very focused on like decentralization, for example, um, or like maybe you're offering some product that like might be potentially like very highly regulated, and like as a founder you might be like um, scared of those implications. So I'm thinking about like there was one deal that we saw that was pretty interesting, or that I thought was pretty interesting. That was like they're building a stable coin. Um, and so that was like one instance where I thought that it like might make sense to be doing like a token only deal, um, just because you're sort of issuing this like thing that might get into like regulatory issues from like from governments. So
Sounds like a Terra.
no, something different.
All right.
Yeah.
I guess going back to the topic of TradFi, there's like a pretty proven metrics to value things there. So you'd use comps. So you'd index to like EV, EBITDA, PE multiples. You'd use a discounted cash flow analysis. So you sort of value it on the sum of the present value of cash flows. And then you'd also use precedent transactions. So the easiest analog we have here is precedent transactions, right? So where a deal gets priced at. But aside from that, like how do you use similar frameworks? Like if you use comps, what kind of metrics do you usually try to index to? I imagine it's more simpler for like SaaS crypto companies that have crypto end markets, but then more difficult for things like layer ones, which it's unclear what metric people are indexing on.
Yeah, I'll start with layer ones, and then I'll try and think of a couple other examples. But to your point, like definitely, actually at the highest level, crypto is just it's a sub sector of just like tech software, if you want to think about it that way from like a TradFi VC perspective. And then within crypto, you also have like these sub verticals, and so each sub vertical, and L1s, or like base layer infrastructure, that is definitely its own vertical. Some of these can command different prices or premiums just because the base layer, for example, like would accrue the most value, in theory, like versus an individual DApp or something on top of it. So in the case of an L1, we've invested in one. It's like you can sell a certain number of tokens. I'm going to make up a number, not that this is their number, but let's say you should really only sell 20% to outside investors. That's a rough, industry agreed upon number. Sometimes it's higher. And then roughly 20% to the team, and then let's say roughly 40% to staking emissions, and roughly 20% to foundation and other stuff. So you kind of like back into like, okay, how much money does the company need? Right? How many tokens can we sell? And you can start to triangulate a number that way, like towards later rounds, that it kind of becomes more about then you also use comps, right? And that feeds into it. So L1s, and just the point here is each vertical alone might have its own nuances. Um, but for everything else, other than like the base layer infrastructure, I do think a lot about revenue. So DCF, to your point, or comps and like a revenue multiple, um, and like a game studio, right? Gaming is a good example because it's very interesting from like a value accrual perspective. The studio has very clear value accrual. They own the game, right? It's run on a centralized server, but the token runs on a decentralized blockchain. And so the game has to be fun. They need to have revenue streams outside of their native token, typically in a stable coin if it's a game studio. Um, so there's clear value accrual there. You can value that. And then their token, what I think is pretty interesting on the gaming side, because most gaming tokens are down only, right? But where I think there's some innovation, and where I see gaming tokens going to not be down only, is adding like more. I guess you can call it a decentralized component, but mostly I mean like UGC and like UGC markets, and really making user generated content like a part of the game. And if like users are being rewarded based on like how good their content is in the game, like if you create a map in Shrapnel and people will start playing that and love that map, like the creator of that map, like making money. But you add some requirements around like the Shrapnel token to that, and suddenly you've got like material value accrual to a gaming token for the first time. But that does require certain network effects. And then other, like DeFi, for example, revenue, think about revenue. TVL is not like the best, is not a perfect metric on its own. You have to add like footnotes. And yeah, so comps, revenue, and then there are some vertical specific premiums or discounts for sure. And I don't know if Bijan has other thoughts.
Yeah. Yeah. No, there's times we'll like take a look at TVL and sort of like back solve that into what could be its revenue, and then ultimately like what multiple a protocol has. So like that's like something that we've like asked protocols before, like different project founders, is like, what TVL do you think it could get like in a year or so? And then from there you can sort of back into the revenues that they generate from a particular like TVL, and get a good understanding of like what their value could be. um, Another thing that, I mean, I do this like for Varus, and then for my own just like personal investing, is all the time I'm just looking at like competitor protocols and like seeing at what they're trading at. So um, I think like the easiest example to like articulate would be, there's like a billion perp dexes that are like coming to market or on the market, and we've just seen tons of them. And so like there might be like DYDX, which uses like an order book model, or there might be like GMX, which uses like basically like Oracle based pricing, and then has this like GLP model behind it. Or you might have Gains, which is using like this like a synthetic based model. Like I'll take a look at all of those, and then like look at the architecture of potentially this new like perp dex that's coming into the market. And then I'll like have some like very conservative estimate of like what the value could be, just based on all the valuations of those competitors. So that's like how I think about like comps and stuff a lot.
True. I guess when you guys think internally too, you like, maybe if you're pre-seed, you're focused more on like making sure it's below a certain valuation, and then considering like team, or like yeah, aside from valuation and numbers, like what other factors will you traditionally index to?
Yeah, the team. I mean, obviously, the team is almost everything in venture. I mean, we are coming into a deal. It's sort of a seed extension round, so it's we weren't the first check in. It's incubated by a fund we really like, and it's an example. And we've kind of done this as well. But if you find a good enough founder and he just has an idea, actually, yeah, I can think of an example. We're doing this as well. If they have the skill set, they have an amazing idea, and they're just like an absolute killer. I say world conqueror a lot because I think that's even larger. Like if you just find like an absolute world conqueror, just give them money and like they'll just go win and you'll make money. Um, but those are very rare. I'm talking, those are like the all-star entrepreneurs that have experience or have the right background. Usually, crypto, it's a younger industry. They might not have TradFi experience. They might not be former executives with successful exits, and you really have to take a view on the founding team. And we always ask them like, what are you going to do? We always ask about key man risk. What if this guy leaves? What if you leave? What if what if something tragic happens and like this guy leaves or something like that? So a lot about team, a lot of key man risk. And yeah, valuation for pre-seed, seed. I mean, pre-seed, it's typically under 10 million. I mean, I rarely find things that I like above 15 million for a pre-seed stuff. I mean, we're talking very, very early stage. Um, and then seed rounds, I mean, very, very rarely over 30 million. Very, very rare. That's still interesting. Um, so yeah, team is huge.
Yeah. Another thing I might add is like less so, less so like on terms of like valuation and revenues, but like we'll also look depending on the type of project. Less so like DeFi. This is like it's not as important DeFi, but if it's like a gaming project or some sort of like user like consumer focused application, we'll like take a look at their KPIs, things like their monthly active users, their churn rate, that sort of thing. And then also like something that I appreciate a lot or like that I look for a lot is just the novelty of a project. It sounds like pretty obvious, but like in the space, there's like a lot of people like duplicating and like forking off code. And so like it doesn't really sometimes sometimes internally we'll just talk about like if a project excites us. Um, and yeah, because like in the space you just have people like forking code and stuff a lot. And so like if it's not doing something new or innovative that could like reach product market reach product market fit really fast, then um, it's something that we might not take a closer look at.
Yeah, one sort of point I think about, maybe this is slightly off topic, but the value of a good tech that comes up in diligence, and then how do you consider that against like maybe actual usage, hype, ecosystem, right? How do you guys think about when you have a good product versus something that maybe is not as good of a product, but a lot of people are excited about and has that community aspect?
Um, I have some interesting thoughts on this. I'll save for another time. But one thing that I could say on that is like crypto is an interesting space for many reasons, but one of them is that narrative is like supremely important. Like it's not the most sophisticated market. It doesn't care as much about tech. It's much more about culture and narrative, and reputation, etc. Like you have chains that may not be the most decentralized, or I mean, BNB is pretty fair to pick on. I mean, like BNB is a proof of authority chain, and then they have a centralized L2 on top of it they launched recently. But people don't really care. I mean, people use that chain and play games, and they don't care that it's centralized. They don't care that's not the best tech. It's a proof of authority EVM chain. And people just don't care. And it has a token, and it was top 5 token for however long, top 10 token. So there are parts of the market where we just have to accept that the tech hasn't caught up to like valuations yet. But to the other point of your question, I think we do have to take a view on certain things like. I don't want to keep using the same company as examples. I'll speak without naming names, but like there's a chain or a product we've invested in where we're like, this is a step forward, and we think like people are going to care more about security, for example, or we think people are going to care more about like their RPC latency, or we think people are going to care more about like decentralization in the future. And so like we will combine our views and like try and think through like, does that make this more or less investable? And trying to speak a little bit concretely without calling out too many of our portcos.
Yeah. Yeah, I mean, most of the time, I think almost all of our projects that we've invested in are like have like a lot of novelty. It sounds like pretty cliche, but like I've been using like the term quantum leap a lot. Like whenever there's a project that I see is just like that just like blows out everything in the space in terms of like its technological edge. It's like something we get really excited about, and we like try to make sure as like best as possible that we can get into those deals. But then there's like also times we've looked at deals and almost invested in deals that, let's call it, like they had like marginal tech advantages, or like we're doing something like somewhat interesting but nothing really groundbreaking, but then they had like really important aspects that you mentioned before, like good community or like really really strong like co-marketing opportunities with like particular partners, um, and so like those things like do well, and like to Will's point, like the best tech doesn't always win, and so those are like the two things that we sort of try to find a good middle ground within.
True. I just wanted to pause and make sure that if folks felt like asking questions, we definitely have a queue and we can actually have you come up to speak, or you know, I'm happy to rattle off the question as well. But maybe let's pivot a bit and talk a bit about like your day to day. I'm sure you're coming up with certain trends that you're interacting with from whether it's gaming you sort of mentioned, or L2s. Like, what sort of things have you been seeing most of your meetings revolve around, and what has actually seemed the most interesting?
I'll start. I'll if there's some VCs listening, I'll share some of our best thoughts, I think, or just how we see the world. I shouldn't say it's like the best way, but a couple of the trends that I really like or think about, within DeFi, for example, I like thinking about the liquidity layer. So for us, that would be like lending protocols and like who's innovating there. And so like that's something I really try to pay a lot of attention to. Because financial services is something that can totally be upended by crypto. I mean, that's kind of what got me into it to begin with, and payments is just one piece of that. I mean, and even when talking to like non-crypto people, it's an example I've gotten used to using to really make them understand what crypto is important. There are many examples, not just in DeFi, but like how easy is it to get a $1 million loan? You know, if you're just going to a bank. Well, with crypto, it's instant. I mean, and bankers I talk to, they're like, they can't even understand how it's possible. But so we like the liquidity layer. It's lending protocols. Anyone who's like making liquidity on DEX is more efficient. We follow that a lot. And then with gaming, for example, the team really has to have Web2 gaming experience, like really extensive Web2 gaming experience, and then also have like an edge within that, or something that they have done really well before coming in and trying to do like a crypto native gaming studio or a gaming studio with Web3 elements. And then beyond that, also within going back to DeFi, I do like things that have potential for like an institutional angle. Um, and just on TVL as a metric, right? Just to combine a few points together. Like TVL it's a good metric in some ways. In other ways, I mean, TVL could change tomorrow. I mean, someone can withdraw $500 million, or a chain might lose a bunch of TVL in a day, or a project might lose a bunch of TVL in a day, or KKR is going to tokenize their healthcare growth equity fund 2 or whatever it is on Avalanche, and that's going to add 500 million TVL or whatever it is. And that's not going to be that actively traded. So like, how valuable is that TVL? But point being, institutions can bring a lot of money on chain in an instant. And so I do it, and I do think institutions will pick up on crypto either once they figure out how they're going to run compliance, or once they get certain regulatory clarity. And that's going to bring a lot of money on chain. And so I do like when DeFi products have a little bit of an institutional angle. Um, so there's just a few things that I think about. And I don't know if BJN has anything he wants to add.
Yeah. Did you mention gaming or? I mean, yeah. So like, I'll just say like gaming has been super interesting. Like, I think it was like a very cliche thing in the past cycle. Like I think 2020 or 2020 2021. Every like VC, and everyone in the space was talking about games. I remember seeing like some tokens shooting up to like $300 million in value without any users or without actually even like a playable game, and things were just going crazy. Um, and so I think like because of that, I think we've seen like internally, like talking to other VCs, and just across the space that like there's basically we've seen like really really good games. As like a gamer myself, I've got to like play test some of these like some of the games we're invested in, some other various games, and there's like very high quality stuff coming to market in like the next year or so. It just takes like a lot of time, and the development cycles for games are long, and so like personally, I think that's like a huge thing that's going to happen over the next year or so. That actually might like, if you want to think in terms of like when's the next cycle or if there could be a next cycle, um, I do think a large portion of it could potentially come from gaming, and I think that's like somewhat like it's being talked about, but like it's not at the forefront yet because like everything's still like in early alpha stages right now. But that's something interesting that we're looking at. I think I mentioned it before, but there's like a lot of perp dexes coming to market, and I'm less so like interested in like perp dexes themselves. As more, I'm more so interested in like derivatives taking off in the space. So obviously, it makes sense that like people want to take on like leverage. That's like the biggest use case for perp dexes, but I think like as the space expands, you're going to start having like more innovative uses and of people like playing with options more at like a larger capacity, and like those type and just like more exotic instruments coming to market. Um, and then like another thing is like UI. Everyone talks about UI being broken in the space. Account abstraction wallets had like a mini trend I think a few months ago, but I don't really see people talking about that much. But I think there's a lot to innovate on there, just because the user experience is still extremely broken in the space. Like I'm on chain a lot, and it's pretty ridiculous that like it'll take me 30 minutes to do something that like really could take less than that if someone just like put time into like building a better UX. Um, and then the last thing I'm like tracking in the far horizon, which I don't think is it's going to be like a long time from now, is like the idea of intents. So there's this one project that I'm really interested in called Anoma. Um, it's probably the most interesting thing that I've seen, or the most interesting like infrastructure project that I've seen, like after probably like Ethereum and Bitcoin in terms of that level, um, where they're essentially like the entire idea is they're building like a layer for people to express the intent they want to make. So instead of like going to a smart contract or navigating to a smart contract to make a transaction, you're expressing, like I want to make a trade with like certain characteristics, and then that trade is like matched with a network of people, and basically like is routed through like the most optimized algorithm to like facilitate someone's specific preferences. It's like very complicated, so like it's something you just have to like read up on probably on your own, but that's like something that I'm looking at in the horizon as well.
I
So
want to
it's
say
like
one quick thing. Go ahead, Jonathan. But
uh,
before we go to AMAs, I wanted to say one other thing. But you go first.
well, I guess I was trying to figure out BJan's model. Is it
Yeah.
like an orchestration thing that you were talking about, or because it
Yeah.
will?
Yeah.
Yeah.
So there's like so yeah, it's essentially like a let's call it like a messaging layer on top of like a traditional blockchain. So the idea is so yeah, basically the idea is like you can just have very specific preferences of like what you want, and like basically get the most optimized trades for yourself. So like for example, let's say you could basically say like I want to trade ETH, for Bitcoin, but like you want to specify maybe that like the price, or you want to specify that the weather in Chicago is like 70 degrees for some like arbitrary reason, and there's all these other participants in the network that are specifying their own like very customized intents, and then you're basically the network finds like the most optimized way to match you and get you the trade that you want with all the other participants in the network, if that makes sense.
So it's almost like an aggregator where then you make money because you take a small fee on getting people better pricing.
Yeah. And then another project that there's another project we talked to a long time ago that's like pretty interesting, somewhat like of a similar concept called like NeoSwap, developed by this GigaBrain like AI researcher who, same concept, you basically like enter into a party or like a pool of different people, and you like trade, you might want to trade like 5 NFTs and get like some amount of like value back, or you maybe like want to like you maybe want to trade for like another NFT like collection, and so like it basically optimizes and figures out the best algorithm to match all of those trades together.
Super cool.
Mm-hmm.
Will, what were you going to say?
Yeah, I was just gonna say, like, we've talked a lot about crypto, like VC, a little bit of TradFi stuff at the beginning and how that translates. But we also we have a few different buckets that I organize deals into. One of those buckets is it's basically an other bucket, like anything. I call it emerging verticals and like Web 2.5 stuff. But one of those deals is Bloxtel. They're going to be at the DePIN Summit in San Francisco here in about a week or so, with a bunch of top funds and other decentralized physical infrastructure, which is DePIN. Not my favorite acronym, but someone someone with more influence created it before me. But they're doing like a decentralized telecom layer, a blockchain layer, as well as the SIM technology that goes within your phone. And it's by the founders of the virtual SIM card that they patented that in 2015. They've got 40 patents to their name. They sold that company, worked there for a few years, and now they're taking the virtual SIM to the next level, which is decentralizing it. And I could go into the benefits another time. I'm sure we'll post some research on that eventually when it's more public. But so we do stuff that's not correlated at all necessarily to like DeFi and crypto performance, but more so like blockchain enabled businesses. So we've seen a couple really interesting ones. That's one that we've closed on.
Wait, so what's the benefit of having, like, I get the virtual SIM card, but if you decentralize it?
Yep. So there's a lot of benefits. I'll give you one example, but they're creating the blockchain layer and the software so that you can actually have decentralized wireless networks seamlessly connect with and overlap with traditional wireless networks. So like today you have companies like Helium, which are plugged into what's actually a free like broadband spectrum that like governments have put out, and they put a token on top of like this free spectrum. But in the future, people are going to set up like their own equipment, and you need a blockchain layer to like incentivize people or like pay them for like connecting to like broadband networks that they themselves or like companies will set up or the governments will set up. And so they're creating that blockchain layer to connect all the networks together so that you could be, I'm in Greece right now on an island, which is, I don't mean to flex that, but if there was like a better internet source here, someone set up locally and I could roam around where the best internet is and directly pay them, because I also have a decentralized SIM, which has other benefits, but one of them is like it could be directly tied to a wallet of mine, and I'm directly paying them on whatever blockchain that network is on, but routing through the Bloxtel blockchain layer. So it's that as well as the SIM technology. It's two pieces.
I get it. So instead of me paying AT&T $10 a day to go do roaming and then they route it, it would automatically route it because I'm not connected to a specific provider. I'm just connected to a network that is multiple.
So that's actually an even bigger idea, is like Bloxtel as a carrier. But the beauty of it is you have the SIM through AT&T that's also compatible with the decentralized network. So it's backwards and forwards compatible. That's part of the beauty of it. And then the bigger beauty, which you have kind of caught on, is like Bloxtel itself could become like a super carrier to an extent if you wanted to just go through Bloxtel.
Sure. I know we talked a lot, so I mean, if anyone wants to speak, we have 5 minutes. Would love to have you on board and just ping people's brains. I see Brian out there in the audience. Do you wanna come say something?
Well, while you're organizing people, I can give one other tip. Oh, here he's coming.
Hey,
Welcome, Brian.
hey, how you doing, guys? I really liked this intense conversation where you're talking about creating this kind of like memory pool order book. There's like a bunch of like TWAP solutions out there now coming on chain that are kind of like a simplified a version of this. Have you seen or are you guys like hip to that area as like on-chain TWAP solutions where you kind of set up more of a bot in some of these like Telegram bots? What's your thought on that?
Yeah, if I'm being honest, I haven't. Yeah, there's like a lot of things to look into. Like I kind of personally, I'm pretty upset with myself. I think I like faded the entire like Telegram bot trend and like missed out on Unibot, whatever it was like shilling that really early. So yeah, no, that's like a yeah, that's the one thing about the space. And like I mentioned earlier, like you need to be like ADHD to sift through everything, and that's just like an area that I haven't like looked into at all.
Yeah, I think the intense thing was like a big promise of like Cardano, like originally, which we see kind of like how that played out. There one other thing that a narrative that I think is really interesting. I wanted to hear if you guys have kind of been involved with this at all or seen anything. Um, the tokenization of molecules and AI models. Have you heard any about this within the DeFi space?
I have not. Um, I mean, I've seen a couple of good ideas for crypto and AI. I'm not sure if we're talking about the same one. I have not heard that term specifically. Um, but just like a couple of ideas that I could be interesting with blockchain is like if you are using AI to like generate certain information or media, and if the information or like assets you're using to like build those, to like make those generations, like if the individual points are on chain, you can map like what artists were used to create this, art, and because it's on chain, you can like properly give royalties or whatever, or like pay people who generated that data or created that art. It's like that to me is like a very tangible example of like how does blockchain and AI work together. But I'm not sure if that's what you're referring to or not.
Yeah, I mean that's a really cool use case. I'm more talking about some of this ideation around kind of compiled models, right? Tokenizing a compiled model and then having access to that model to use it. It's almost like a
Oh, yeah.
yeah, yeah.
Yeah, no, I mean that's another use case of crypto. I mean, like that's it's a beautiful thing. I mean, you could, but you could also you could say that about some other things like any kind of data on chain. But no, you're right. That yeah, one of the many great use cases of crypto right there.
If you had to pick a narrative that you're most bullish on, I think you may have covered this, but I'd love to know from each of you like which narrative like you're the most hyped about.
Yeah. I think for me, at least right now, yeah, I mentioned earlier, like I think I'm most hyped about gaming and just being able to like use crypto in like a very like consumer focused way that just hasn't existed in the space before. But then I also like want to say like you bring up a really interesting point about these like sort of like niche use cases in crypto that like I haven't even heard about yet. With like stuff like I mean I've heard of like DeSci, but I haven't heard of like that level of a project doing something like that. And that's kind of just brings a really interesting point in the space where if you're like on crypto Twitter and stuff a lot, you have all these narratives that are presented to you like sort of like near term or medium term, and then you miss out on like on a lot of like really interesting things that are happening that may have like a very long term horizon. So like one of the things that I'm thinking about is like there's probably really interesting ways to like disrupt and innovate in terms of like our energy grid and like how people receive power through distributed generation using crypto. So there's like projects like I think like Energy Web Token is like one of the things that I've been meaning to look into for like 2 to 3 years now, or however long it's been around, and I just haven't gotten to it, just because sometimes the narrative or hype just like might not be in the space like in the near term for you to be like for it to get the sort of like hype and traction for the price to increase basically.
I'll say something more abstract, but like one of the things I think about is like right now, who's using crypto? It's like crypto natives pretty much exclusively. Well, funds are going to lose money, and it's going to be harder and harder for funds to raise more money. It's going to be harder for crypto to get adoption if we don't start creating things that people are actually using. And so, like, well, what are people going to start using? And I start going through these steps in my head, and I, go as many steps as possible, and then I come back and I'm like, all right, I don't want to be 10 steps ahead. I want to be 1, 2, or 3 steps ahead max. So where are the investable opportunities there? That's one of where earlier I said within DeFi, I like things if there's an institutional angle. I think that's a near term, very like tangible uptake in crypto usage that we'll see. Like once it could be Visa, MasterCard, for example. Once they realize they can make wider spreads on payments or forex translations of users or whatever it is, or wire transfers by going fiat stablecoin fiat as opposed to like fiat to fiat transfers. Like once these institutions realize that crypto is super super useful and they can make more money, they're going to get on chain in really meaningful ways. And that's just one example, but I try to think about where are we going to see the next uptake in adoption, and like how do I make money off of that?
That's rad, dude. Guys, we got to talk after this because I got a couple of things on the plate that you may want to look at or around these narratives. But I completely agree. I will say one thing. I pay a lot of my team in crypto, and recently international wire transfers, because I hit some sort of threshold or whatever, are now only $25. So if I need to pay somebody on ETH and trade from USDC to USDT and then send them the transaction, it's actually more expensive now to trade on ETH than it is to just do a international wire transfer, which is wild.
Honestly, you raise a great point. I mean, some people would argue that ETH shouldn't. I think some ETH people would say, well, ETH doesn't need to be cheap to be successful. I mostly disagree with that. I think economics are very important. I think it's underemphasized by a lot of crypto people, but it's very tough to get right. It's much easier said than done. That's also why I personally would say that I'm very bullish on like horizontal scaling or like networks that are able to create more block space. So those are like I used to work at Avalabs, so I got a really good familiarity with Avalanche. But then you can argue against like the Avalanche tokenomics, for example. But I do really like their scaling model because you can create more block space, and then their public EVM chain, price, the gas can actually go down while price goes up because activity is shifting to other blockchains secured by the same token. But yeah, you raise a super interesting point. Like, does a base layer need to be cheap? But yeah, there are other tools you could probably swap your bridge to another chain and then swap where it's cheaper. I don't know. Like, yeah, it shouldn't be that difficult though.
Totally, and you brought up the thing that time has a premium as well, right? So you can spend another 30 minutes and get it cheaper, but that's 30 minutes of time waiting for bridges and stuff. So yeah, there's a ton of stuff that needs to be done. This is a rad talk, guys. Thanks for answering my questions and having me up here.
Thanks for asking good questions. Yeah.
Thanks for coming up, Brian. Always good to have you in the mix. I think we're coming up on time. I'll remind folks that we can ask additional questions. But why don't I, if there's nothing else that comes in within the next 30 seconds or so, we can just do like final closing thoughts. I guess I forgot to introduce myself at the beginning, but I lead business development here at Nibiru Chain. So that's me. Definitely enjoyed talking about this. I knew Will and Bijan from our time in New York, and we did some DGen stuff. We got rug pulled together. Brian, we've done a podcast in the past and have been working together in prior in current arrangements. So excited to see everyone here for sure, and always great to give the community an update.
How should we close out? What do you want to hear about last?
Maybe just a bit like final summary of Verus Capital, and yeah, I guess that's it.
All right. Yeah, so I think to the point of this spaces, and I know there's more really good questions we didn't even get to, specifically on like the value of TradFi experience as it relates to like crypto BD or crypto BD in general and how important it is. But I do think TradFi experience is very important, if not for the reasons we mentioned, like attention to detail. The crypto has a lot of work to do just on like thinking ahead, coming to grips with like really fundamental valuations and how to grow a company. Because there's a lot of like really young founders, and so I think when you're raising money, like find people who have had experience either doing that before, like really successfully, or have advised a bunch of other companies, like raising money, selling their companies, buying companies, which is what we did in TradFi. TradFi is a big world. But most people at Verus on the venture team, everyone on the quant team, obviously, but even on the venture team, we have TradFi experience and crypto experience. So that makes us like super unique within the crypto VC space. Like we've actually built, ecosystems, or we've worked at other crypto funds before coming to Verus. So yeah, we're as hands-on as you want, or hands-off as you want. But we love our portcos. We dream about them. Like we literally love them.
All right. Well, it was a pleasure having everyone. We'll see you guys around. Cheers.
Peace.